bring on board then Dipan Mehta as well, who's joining in on the show. And Dipan, headlines seem to suggest that it's been the best ever November sales for some of these auto companies on the back of robust festive demand. What is it that you're making of the kind of move that we've seen within the auto space?
Good morning, and thank you for having me on your show. I think auto sales are on a roll, and we are seeing consistent improvement because the supply chain issues have been sorted out. In any case, over the past year and a half, the order book position of a lot of auto companies was anyway bulging. And now that manufacturing and supplies have improved, we are seeing those in the numbers as well. But the bigger story, if you ask me, in the auto industry is the rising average selling price of models. So clearly, I think there is premiumization, which is a very strong trend playing out in the auto industry. And even if volume growth is high single digit, the actual revenue growth is translating into mid-teens or even higher because the average selling price of the models across the board on all the segments, including tractors, is going up. So that's a very positive trend. And of course, higher selling prices means higher margins also. And at the same time, I think we are seeing raw material prices also pretty much benign. And with oil prices dropping, I think it will reduce the cost of ownership. So next few quarters looks very exciting for the auto industry. And some amount of, some amount of that has been captured. But I think the numbers which come through from this quarter onwards will surprise on the upside.
Dipan, let's get in your take then on ITC, owing to the kind of key takeaways that have been told out in the analyst meet, the physical one. Do you believe that the long-term roadmap looks strong? Shareholders should continue to remain a bit patient?
See, I'm not very positive on ITC, never have been. And maybe that's the reason we missed out this fantastic upside. And the reason is that we would classify ITC as a tobacco company and not a FMCG company. And with a tobacco company, it has a lot of baggage and legacy issues and health-related and compliance-related issues as well. So from that point of view, we like to avoid ITC. If you compare, ITC has been in the FMCG business for decades. But you compare the performance of ITC's FMCG business with some of the other FMCG companies, and you will find that it is quite disappointing. They've created the turnover, but the return on capital employed, the profitability has just not. And end of the day, after so many diversifications, when I entered the market in 85, since that time, ITC has been trying to diversify its operation and move away from tobacco. But even after almost 25, 30 years or so, tobacco still remains 80% plus type of contribution, top line, bottom line. And that's one business where volumes cannot be expected to grow, given the kind of health-related issues which are there. So I would avoid ITC at this point of time. There are so many other consumption-related stocks that one could look at. And certainly, I think ITC may do well, but I'm not so confident of the long-term future.
Dipan, so are you just staying put in this market post the kind of move what we've seen in October? Are you just simply saying that, okay, do nothing, just stick to your positions?
Good morning, Nikunj. I think we are trimming our positions. We are certainly not taking any fresh bets, that's for sure. And the real problem is with professional fund managers who are keeping on getting money into their schemes, whether it's PMS or mutual fund, and then they are forced to deploy it in markets like this. Eventually, when a correction does come, you will see all of these schemes and funds starting to underperform. So, I've seen this many times in the past, and I think it's time to be a bit cautious and take some money off the table, or even if you have fresh cash flows coming in, at least do not deploy them at at these elevated levels. Let's just wait and watch. Corporate earnings need to catch up to the elevated price to earnings multiples, which we are seeing just now. We like to see some compression in these price to earnings multiple before we can commit more funds to equities.
Hello, what happened there? Dipan Mehta, it went public less than 40 rupees, 32 rupees. Yesterday, it touched 100. So in less than 6 weeks, it's been a 3x. I mean, this perhaps could be one of the biggest multi-bagger created in the PSU space in its history, right?
Yeah, absolutely. And at these levels, you can't really justify buying a company like IRDA. When it came out, it was well priced, it was a good issue. But when it goes up the way it does, then certainly I think it is amongst the premium valuations within the NBFC space. And NBFC space per se is not like tech space or platform, where you can get 50, 60 100% type of growth rates. So I'd be a bit cautious at these levels. The valuations certainly seem to be stretched. No doubt, I think the prospects are phenomenal. There's higher and higher investment taking place in renewable energy. They seem to have got the formula right in terms of lending to the right projects and recovering their money. But having seen lending to industry or lending for projects, how sour it has turned, I'd just like to be a bit cautious. See, lending for renewable projects is very different from lending to retail. Retail, the NPAs just come in small numbers, and to an extent, I think they're manageable. But when it comes to lending to projects, the ticket size is much higher. And even if a few projects or a region or a segment starts to underperform, maybe because of government policies, demand supply, we don't know, then NPAs can, suddenly start shooting up. So I'll be a bit cautious in IRDA at these levels.
All right. About your views then on the entire pharma basket, recent reports seem to suggest that the pricing environment in the US generics market is going to remain benign in the near term. With the kind of raw material cost environment seeming to be in place, what's the outlook for pharma companies?
No, see, I'm quite positive on pharma. And the reason for that is that I think some amount of competitive intensity has reduced in the US generics market and globally as well. And some amount of pricing relief has come back to the Indian pharma companies. Raw material prices are now, well at normalized levels. Chinese supplies have certainly improved. Domestic market is doing well for pharma companies. And healthcare and spending on pharma and medicines globally, that's not going to go down. It's something which is really secularly keeping on going to move up. And Indian pharma companies will keep finding small niches, new molecules going off patent, and try and focus over there. So generally very positive on pharma. After many years of underperformance, we are seeing good numbers coming through last 2-3 quarters or so. And typically, I think this should last for a few more quarters. Valuations also are quite reasonable in that typically 20 to 30 PE multiple range. So PEGs are about 1.5 to 2 times, which makes them quite reasonable. And very strong, aggressive managements, entrepreneurial management, which do tend to, grow the business when the opportunity does arise. So very positive on pharma. And even some of the laggards like say Divi's Lab or Gland Pharma, we shouldn't write them off, because end of the day, they are fabulous manufacturing powerhouses and just need to find the right rhythm and the right products. And when they find those, I think you will see them also doing quite well.
In yesterday's whole market hullabaloo, there was huge price movement in Z. Up, down, volume action, absolutely incredible. There has been a big comeback in metals, Kunal, and it just amazes me. Crude is down and metals are up. JSPL, I think, hit a fresh 52 peak high.
Yes. JSPL hit it. And on Z, the reason why the stock was all over the place yesterday because the stock came out of the F&O ban.
Came out and came in again.
Yeah. So for that for that one day, the activity was because the stock was out of the F&O ban.
I think it's back in F&O ban.
Yeah, it's back in F&O ban today.
Dipan, it's quite ironical, right? Crude is down because world is slowing down. Metal is up because everybody expects China to come back. Decide कर लो भाई. Crude या तो ऊपर जाएगा या metal नीचे जाएगा. दोनों क्यों हो रहा है?
These are all global factors. One really can't say. All we can say is we'll take both these trends with both hands. And if you look at India's listed equity, the lower the prices for metals and oil, the better it is for corporate earnings for a large number of companies. So from that point of view, rather than analyzing why it has gone up, gone down, I want to focus on businesses which are raw material intensive. And I heard earlier in the show, tire companies to an extent which are raw material intensive, even building material companies, consumption companies like electricals, appliances, FMCG companies. I think they will all benefit from lower raw material prices, and a lot of those low prices will be utilized towards marketing spends, and that certainly will grow the volume, will grow the economy as well. So I think it's a very positive trend. Of course, some companies, maybe like ONGCs, some of the steel companies, aluminum companies will feel the pain. But then they're expanding capacities also quite regularly, so it would not be as bad as Street is envisaging. But by and large, I think lower commodities is very positive from a corporate earnings perspective. And Nikunj, at this point of time, what we sorely need is the corporate earnings to sustain, even perhaps improve, to justify these kind of P multiples.
Joining in, let's take a very quick break on that note. When we come back, the